let's talk about the rest of the United States. Where do you see the most promising possibilities for real estate?
I mean, we really follow the large urban markets and job growth. I mean, real estate's really just a byproduct of economic growth and jobs. And so you really focus now, San Francisco, obviously a very strong market. We're doing, 5 or 6 different developments in San Francisco today. People say that market's overheated, but the truth is, if you look at the job counts, the backup is there. There's evidence of why rents are rising and things are doing well there. People want to live in San Francisco. It's like New York in the sense that companies are relocating here because that's where the talent is. And if you follow the talent, follow the jobs, real estate always works.
And you have no fear when you're looking at where you're developing in cities like San Francisco. We know that it is super hot. The valuations of these tech companies through the roof. But are you actually looking at these tech companies and saying, well, they're not necessarily making money. All they're doing is raising money. And does that factor into your decision making when you're taking on these big projects?
It does. Certainly in terms of who your tenants are, you think hard about that. But it's not. That's not all the companies in San Francisco, and there really is true demand for jobs and job growth there, and that's what we track, and that's why we think San Francisco is a good long-term bet.
Are we talking mainly the upper echelon in the rental market, or are we talking through the whole range? Because we had an analyst on earlier this week who had some really disturbing number about the percentage of lower-income people's income that is being given over to rental.
Right.
And it's growing.
So I mean, that's a problem we have in many of the cities in the United States, the percentage of income being spent on housing.
Not just rental.
Not just rental.
Right.
Housing in general is becoming higher and higher. And that's one of the policy issues as a country we're facing. But in terms of the market demand in those cities and the product that we focus on, it's very strong.
Julie's got something in the terminal?
Yeah, I've been looking at REIT stocks and how they've been doing, and apartment REITs in particular have been doing spectacularly well. This was also shown by the housing starts numbers yesterday because multifamily housing has just been exploding. So what you have here are apartment REITs, and you can see the clear outperformance here. Regular other REITs, although it's inclusive of apartments, and then the S&P 500, the S&P is orange, the other REITs are in blue. So basically you've seen apartments do much, much better. And I'm curious, when you're looking at these urban areas, apartments versus office REITs or office properties, for example, I'm curious what kind of dynamics you're seeing. We know that multifamily housing is exploding. What's happening in the commercial market?
I think there's a strong belief in the investor side that kind of the future growth in the United States is a little bit away from home ownership and towards multifamily housing. And I think if you talk to kind of people in the millennial generation, that desire that I have to own a home is not necessarily there anymore. And so from an investor perspective, you've seen a lot of capital flows into the multifamily sector, kind of driving what you're seeing up on your charts versus the office sector and retail. And then if you go into the markets in particular where there are shortages, New York and San Francisco, you just see that supply-demand, pushing rents up.
You're just too optimistic for us. We need to tell you what's worrying you. What are you afraid of? What stinks in your world? Besides your football team.
What's besides our football team?
No. Our football team's been doing just fine. There was one bad play.
Really?
One bad play.
Really?
That's unfair.
Right.
Unfair.
I think we all have to worry a little bit about overheating in the United States, and I think you just have to choose the markets that we don't view real estate as a macro bet the way we invest. It's very micro. It's very local, and so we focus on the areas and the opportunities that we see that can be the most profitable. But certainly, I think that we're in for a little bit of a downturn. Across the United States, that we just have to be careful, and how we're investing has to be flexible enough to weather those cycles.
But that's not hitting the high-end market. That's what's sad.
It's not. Well, now you're back to New York a little bit, I think. And I think here in New York we have two different markets. We have that very, very high end, which you've seen kind of up and down 57th Street with these super tall towers. And to me, that is a very speculative market and a market that we stayed away from. Our focus has always been the very high end that can service the domestic buyer. So the New Yorkers and people across the United States. And if you look at who's buying on 57th Street, it's not a lot of New Yorkers.
But Related has also had an affordable housing, in the past at least, an affordable housing part of your
portfolio. Affordable housing is really the backbone of our company.
Exactly.
We're one of the largest affordable housing owners and developers in the United States. And it is a very critical part of everything that we do. And, in the cities that we operate, it's important that you focus on affordable housing, not just the high end. It's good for the communities in which we operate. It's good to have that going while you're doing high-end market. And it's something, it's the right thing to do. And
Yeah, I know in Yonkers, where I'm involved in a charity in the schools, Related has been a very good, valuable partner to the community up in Yonkers.
Yeah, no, I mean, we up and down the East Coast, we've been very active on affordable.